Hi and welcome to Trader of the Week. There's no getting away from it. I've had a lousy week's trading, and this short trade in EuroSterling sums it up nicely. On Wednesday, I thought I'd spotted a change in trend when Tuesday's candle closed in a tweezer top pattern. This pattern is more of a warning than a full-blooded reversal signal, so I kept my stop loss tight for my first short bet, the result being that I was stopped out for a reduced profit. The price subsequently plummeted following Beardy Ben Bernanke's speech, and by Thursday morning I was more convinced of the move lower and scaled down to a 30-minute chart to look for an opportunity to go short again. My strategy here was to watch for a 50% retrace of the red Marabuzo candle from the previous evening. A failure to move comfortably above that level would be my trigger to open a short bet. Early trades saw a return above the line, but this lack of conviction failed to hold for more than an hour. I waited for the candle to close below the line. This also coincided with my strategy of a close below the 21 period moving average, confirmed by an RSI reading below 50. I sold £8 at 84.12. I placed my stop loss just above Wednesday's open at 84.40. As the move was in its early stages, I was wary of a reversal, and a close above here would engulf the previous day's fall. On my £8 bet size, this gave me a risk of £224. I didn't set a limit order. If I was correct in my call here, I'd be looking for a move of several hundred pips. So what happened? The trade started well and was down to 83.88 within the hour. However, the move lower ended in a classic hammer reversal candle. Unfortunately, I was confident enough in my call that I ignored this sign. I also ignored the close above the 21 period moving average, and the result was that around mid-afternoon I was stopped out of the trade for an overall loss of £224. The euro continued to move higher, but hit a peak at 84.65. Today the currency continued its journey downwards, but without me. It's currently at 83.40 now, and I'm waiting for a pullback to open a short bet again. So is there anything I can learn from this trade? It's always easier looking back on the trade, but I do need to remember that when trying to call a reversal, I should allow more breathing space with my stop loss. What I should have done is to use a smaller bet size and place a stop loss wider, either above the recent high, just above 85, or just above the Marabuzo line on Tuesday's big down day. This was the point the rally failed at. We never stop learning. Have a good weekend.